Oliver, Serco has announced a £1.5 billion write-down, made a major revision to its forward earnings targets, and the stock is down 33%. The CEO, Rupert Soames, says this is a little step back to take a great leap forward. Is Mr. Soames an Olympic long jumper?
Well, not literally, no. I don't think he'd be able to go to the Olympics. He did pretty well in his last job at Aggreko. This was a company that hired out power generating systems. He did a great turnaround there. The share price progressed a lot under his leadership, but it's a much bigger job here at Serco and in the public eye. Serco's had a lot of problems. It's had a lot of inquiries into its businesses, the way it's handled contracts. It's an outsourcing company. It does work on behalf of the government, which is meant to be a great sort of way to do business. But Serco's had a lot of problems. He's taken over and uncovered a lot more problems, and this is the consequence.
It's funny that these public sector contracts should turn out to be unprofitable, because it was supposed to be the rapacious private sector that was going to take advantage of the taxpayer. Why hasn't that happened here?
Well, it's not happened because as Rupert Soames puts it, the public sector has managed to transfer a huge amount of risk to the private sector. So all this idea about the private sector being clever enough to do all these jobs far better turns out not to have been the case, and a lot of these contracts aren't going well. A couple of examples: Serco's got a big contract to maintain patrol boats for the Australian Navy. It's turning out to be far more expensive than it thought. It's £150 million of the write-down is because of this one Australian Navy contract. In another, Serco runs centres for asylum seekers in this country, and he says they lose money on every asylum seeker that comes through the door. As the number of asylum seekers grows, they lose more and more money on those contracts.
Hard to make it up on volume.
Yeah, very hard.
So we've written these contracts down. We've seen the stock down by a third. Are we cheap now?
No, not obviously so. So they've made a big cut to forecast for this year and a big one to forecast for next year. And they've given a vague indication of where things might be in 2016. Operating profits, which at one point were over 200 million at Serco, might be down as low as 80-odd million in 2016. From there, who knows? But assume there's a recovery, and Serco says that it's in markets that are grown to grow, sort of 5 or 6% a year, and there's going to be that sort of similar level of operating margin. If it grows, then by sort of 2018, they might be making about £110 million of profits. Now, the share price drop puts the shares on about 11 times those profits for that year. So not obviously cheap, given how far away those profits are and how uncertain they are. There's an awful lot that can go wrong between now and then. So I don't think the shares are very obviously cheap, even after dropping by a third in a day.
We await the great leap forward, Oliver. Thank you.